Hello, this is Greg Maxwell with Amicus Settlement Planners. Today we're going to talk briefly about attorney fee deferrals. Give a brief overview. We're going to talk about the types of deferral vehicles that are available to attorneys, and then we're going to talk about ways that you can use attorney fee deferrals in your practice. Contingency fee-based attorneys, personal injury attorneys. You have a unique ability to control how much income tax you pay in any given tax year by using attorney fee deferrals. It's one of the only professions that I know of where you can actually control the amount of income that you're taxed on from year to year. So the way that attorney fee deferrals work is that the taxes that would normally be paid in the year you settle a case can be deferred to future years if you plan properly at the time of settlement. So rather than receiving the income in the current year, you defer that income to future years, which means you're also deferring the taxation on that income to a future year as well. So there's no reason to ever be taxed on more income than you want to pay in any given year if you're effectively using attorney fee deferral strategies. There are a couple of types of deferral vehicles that are used primarily, and what has been most common in the past has been through the use of structured settlement annuities. These are the same types of annuities that your clients have. The money goes into the annuity, it's then paid out in a preset stream of future payments in the future that you design. The nice thing about those annuities is that they are guaranteed, the rate of return is guaranteed, but they're not very flexible, and the rate of return, because of the guarantee, is generally fairly low. Another option that's come about in the past few years that's very appealing to many lawyers is what we call an investment account option. Essentially, it's a super 401k. You can direct the investments, you can invest in any type of investment portfolio that you want, and hopefully you gain market rates of return that are better than those that are paid in the typical structured settlement annuities. So why would you want to use this? In what situations would you use attorney fee deferrals? Well, obviously, to defer income taxes to future years, or in a year where you have an unusually large settlement and you don't want to pay that unusually high tax bill, you can defer that large fee to future years. You can really control your firm's cash flow problems into future years by deferring your fee and spreading it out over the next 5 or 6 years to pay for overhead or to pay for salaries or things like that. You can use them as golden handcuffs to retain key associates and employees. So you can tell them, look, we've got this attorney fee deferral. It's coming into the firm in 3 years. If you're here at the firm in 3 years, then you get a portion of that or you get all of that. If you're not, then it just goes back to the firm. So you can use it as a way to retain key employees through golden handcuffs. And then, as I talked about, you can use this essentially as your 401k strategy. You can invest and get market-based returns, and you're using the gross fee instead of your net fee to do that. So again, that's a quick overview, very high level on attorney fee deferrals. Please give me a call, 801-330-0723, if you'd like to chat about any of these options in more detail.